Hi everyone. Today is June the 17th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. Today we've got a fairly quiet day. It's usually auctions on Mondays, but we do have the U.S. Empire State Manufacturing. Sorry, I was trying to read that, but it didn't go very well, did it? Empire State Manufacturing. It looks like Australia has a bank event, right? They're probably going to announce rates. The EU has got some sort of thing, and other than that, kind of a quiet day. We are in a digestion mode. Notice we've got the anchored VWAPs. Oh, and particularly, you'll see that we have rolled the contracts. We are now in the U contract. That is for September, right? And so here is the rolling over of that space. Let's take a quick look at the YM. We are holding at the 38,900 area. I have 38,650 as the support zone. And so my thought is that we should hold that edge. I'm going to move it up a wee bit. See if it matches the open of this short candlestick. No, it still doesn't. 38,680 though is going to be that number right there. And that's the one we're going to watch to hold a floor. What do we see today? A little bit of negative action. Bounces are still sell zones. So until we get above 39,040, my suspicion is that the bounces will continue to sell. That's what's happening inside of here. What is trend? Down. What is momentum? Down. So the bounces are going to be sells. If it rockets past 39,040, the line that's been building is now somewhere around, take a look, old resistance to the left, potential support action here to the right, looks like about 39,150, thereabouts, and so you'd have 110 points / ticks to the upside there. Let's go all the way to the ES. We're going to use 2 because we are in contract roll, and that is simply the way that it works with TrendSpider. It stays at that edge until close to the expiry time. Here it is. You'll notice the pricing is quite different, right? This is 54.34, but the contract here, which is not the contract that they've made current yet, is right at 5,500. So this is a round number, and so this is Monday, Friday, Thursday, Wednesday, big day, that's the FOMC day. We'll put a box around it like we normally do. This is inside pressure events. What is the trend? Up. What is momentum? Up. It means the dips are going to be buys. Where might the dips be? Well, until this morning's ticks, right after Wednesday, we'd been making lower highs and lower lows. This morning we upticked a little, but now we're dancing around this area just under the close of Wednesday. And so 55.0350 is going to be the range top that we are very likely to see today hold as heavy congestion. So my suspicion is that bounces into, let's not do that one. Let's say bounces into 55.20 or so, 55.1950. If it bounces higher, it should come back and fade, all right? The area that we might want to look for support floor is Thursday's low, which is 54.73, all right? Pullbacks are buy zones. Notice how the highest high and the lowest low on this VWAP action, let's remove that one, on this VWAP action here is crowding right around that 54.50, bouncing just above it. So my thought is, if it comes into this area near these moving averages, we're going to see a bounce zone. That's 54.50. All right, let's go to the NQ. Oops. Well over the FOMC box. So this one's in breakout formation. What is trend? Up. What is momentum? Up. So trend and momentum up. It says pullbacks will be buy zones, but they are likely to be more shallow. Okay, we are nowhere near these guys. And what we really are doing is breaking over the top of Friday's close, which is 19,959. Well, guess what all the traders want to do? They want to test 20,000. I mean, come on. If we're this close, we may as well try to give it a go. Okay, so what normally happens when we move out and up, we get our 20,000 leg, but very often it will run, I don't know, 50, 60 points above the region. So if we breach that 20,000, the first reversal trade might be one we want to take, but we want to cover it as soon as the candlesticks stop giving us lower lows. My suspicion is the bounce up over 20,000 is going to get run and then reversed, but compression is probably going to be the order of the day. Now we know, look at the moves, right? This is almost 300 points wide, and so we want to be very careful about that. Pullbacks are buy zones. We have a clear line in the sand around 19,880, right? 871. That's Wednesday's high. A pullback into there, probably going to give us a pretty bounce. If not, it's got 110 points to the downside in case that happens. So just be careful right there with those formations. Let's take a look at gold. Bouncing up here, right? Double bottoming formation. This is my thought, right? I think it's very sideways, folks. If you're looking for a trade here, the upside pressure event says you better watch out. A lot of sellers are coming here. Why? What is the slope of the moving average? It's down. What is the momentum? It's down. And so that means that bounces are going to sell. So where are we? Caught between these two anchored VWAPs. The bounce up into 2350 or so should be a sweet spot for short. It might not even get there, but that looks like a primo trade today on this particular contract. All right, let's take a look at the CL very quickly. I believe that one's rolled also. These guys headed up to 90. Take a look here. Highest high, lowest low is to the left. Price action is above both. What is trend now? Well, it's slipped. Remember, I said, hey, when we were coming into this edge, I said, hey, trend down, momentum down. What does this mean? It means that in general, the trend is down and price action will fade negative. So what happened? We bounced into the moving average and we faded. But because of these higher lows that keep coming, it tells us, you better watch out. This thing could be bouncing into the next higher level of congestion and changing direction. And that's what we did all of last week. We bounced, changed direction. Now what is the slope? Up. What is momentum? Up. Where are we? Caught between two anchored VWAPs. And so pullbacks, going to be buy zones. Where are the traders going? 80, 81, maybe. Looks like there are a lot of sellers up here, right? At that 79 area. I don't see oil going past this zone. So I'm going to be looking for a short up near 80. If it comes, great. If it doesn't, I'm still going to wait for it. I'm not trading in this garbage right around here. It's just too noisy. If, per happenstance, I'm staring down the chart and 77.68 comes into play, I'll give it a go for a long. And my stop, my stop's probably only going to be 25 cents or so, right? $250. Remember, it's $10 a tick. So very messy. All right, lastly, let's go to SPY. We've got SPY off of the top. Remember, this edge here is our, okay, what in the world is this one? Highest volume candlestick right down here. And then we have the FOMC, and I rotated the FOMC formations down. Now I need to rotate them up. Sometimes I forget these crazy things. Okay, so what we can see is we are not making new highs off of that Wednesday edge, right? We're not. 544 is the top edge. Now, where are the traders going? Well, could be heavy congestion here. 1, 2, 3, 4. Everybody's sitting around there. But it could be the low here at 539.67. If not, we slip down into the base of the FOMC candlestick, and that is 537. What do I expect? Sideways chop. I don't expect anything. Today is going to be very, very choppy. We are opening inside of the range, inside of the values of Friday, and that means that we have to let the traders figure out where they want to stop. And so my thought is dips are pullbacks and big spikes are sell zones, but momentum is clearly up and trend is clearly up. The problem is we're very far from the 14 exponential simple moving average. And when that happens, we normally have this kind of behavior where it rotates, spikes up, pulls back, and then rotates over. All right? There we go. Qs, lastly, have I been talking a long time? Feels like it. Here we are, top of the range, 481, didn't make it. We are in breakout formation. This is the FOMC area. I don't have any idea why I've got this one moved here. All right, how about I remove all the channels because I can't remember what I was doing there. And we look at, here's our FOMC, and we're going to clone it. Whoopsie. That's the edge. We're going to clone it, pop it up here, and yeah, that looks just right about the halfway spot, right? Up to 481, 485 is a nice round number the traders like to get to. What's the formation? Pressure building, pullbacks or buy zones, upward formation, but please remember, folks, the index is moving at a very different clip than its components. And that is causing divergence. That divergence can only go so far because these things are actually pinned to actual instruments. So look for sideways action in the broad areas or deep pullbacks that cause a shakeout. Optimally, that is my thought. The markets are getting very weird. So we have to be super careful. I know weird, that's a pure technical form, isn't it? So you know what I'm saying. Pullbacks or buy zones, pay attention. If we break, see this low, higher low? If we break the higher low formation and we break down under this 474 and some change, we've got ourselves a shift in the rotation. Otherwise, take care, be safe. We've got a holiday in the middle of the week, ugh, but 2 days, holiday, 2 days again. So price action could be very, very disjointed. Stay safe.